Hello friends and welcome to Kotak Live's Market Outlook for September 23. Markets for some time are now stuck in a rut. They're failing to find a direction in spite of trying to go whichever side. Probably that's because there is lack of consensus on which way are we headed in a meaningful manner. The world's most anticipated recession has failed to arrive, or maybe one can say it kind of almost arrived but never really failed to stay. Why is that? Probably because we are getting push and pull on both sides between price of the money and size of the money. While the central banks around the globe have materially tightened the screws on price of the money, taking interest rates far higher than many in markets expected, the size of the money, which is to say the quantity of money that is being either sucked back by the central bank in the form of quantitative tightening, or the amount of balance sheet expansions of their respective governments, are yet to proportionately tighten in comparison to price of the money. And so we are in this tug of war, and somewhere in between the markets are stuck in a rut. We have an event-filled September coming up. So will September break the rut? Well, it's for anyone's to say, but it's definitely going to be an interesting September. We have a bunch of central bank meetings, G4 in particular, US, UK, Eurozone and even Japan. It's unlikely that the central banks are going to surprise materially in absence of a data surprise. The best they can at this juncture do is probably take the higher a little high, but it's not the higher that the markets are so concerned about as much they are concerned about the longer. And it's the longer piece where the dissonance lies, at least in the fixed income market at this point in time. Locally, it's September again. So we will probably have discussions around the second half borrowing calendar for the government of India, fiscal deficit, and also the much discussed and debated topic around this time of the year, prospects of India's inclusion in a global bond index. Additionally, because we had a great monsoon in July and probably an equally worse one in August, the path of monsoon and the kind of distribution pattern that we see in September will be crucial, at least to the food and agrarian prices. Overall, we have a lot to look forward to in September. Will any of them be a cue strong enough for the market to find a clear direction? In our view, probably not. Monsoon prognoses are already weak, and I think somewhere markets have baked that in, that a bit of fiscal support will be required to keep food prices in check. Index inclusion is a story where markets may probably find a cap in yields, but whether it happens or not, honestly, is anybody's guess. The chances this year, like last, are high. But that really doesn't give us much to work with. And what about the global cues? I think global markets themselves are finding their own direction, and in absence of them finding their own path and feet, it's difficult for us to find a direction when we look up to them for a direction. So September most likely going to be a range-bound set of markets with Indian 10-year in probably a 710 to 725 kind of a band. And happy investing.